There we go. We're on.
Yep.
All right, we'll call the meeting to order at 6:01 PM. Recognition of visitors. Has Cindy gotten everybody jotted down that's in attendance?
I think so.
Yep.
Cindy, you've got Julianne that just came in.
6:01 PM. Recognition of visitors. Has Cindy gotten everybody jotted down that's in attendance?
Beth, mute yourself. We're getting deep there. Thank you.
So who is Christina?
Christina is presenting insurance. So she's a guest and she is presenting the first item in the agenda.
Okay.
And here comes Roger Goslin.
Okay.
There he is, the man, the legend, the myth.
Is Damian Henry on?
I don't believe so.
Okay.
Go ahead, Tim. When you're ready.
Approval of the agenda. Can I get a motion in a second?
Rutland County will make a motion.
Chittenden County will second.
All those in favor of approving the agenda as presented, say aye. Any?
Aye.
Aye.
Those against, nay. Motion carries. Secretary's report. I trust everybody's had a chance to read it. Can I get a motion in a second?
Addison County makes a motion.
Windsor County
County will
second.
second.
Is there any corrections to the minutes as presented?
Tim, under the Governor's Council section on page 4, the statement on the bottom of the page says equipment money comes from the state, not VAST. That's sort of true. It's registration money, but it still comes through VAST. So I'd like to correct that to say it is registration money.
All right. Thanks, Pat. Okay. So the first and second was Pat and Stan.
Oh,
It works.
Windsor County.
I'm sorry.
Addison and then Windsor.
Oh, okay. All right.
All right.
Was the correction noted? For the
Yeah.
meeting?
Yeah.
Okay. Any other corrections to the June 28th meeting minutes? All right, here and then we'll take it to a vote. All those in favor of approving the June 28th minutes as corrected, say aye.
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 Those against, nay. Motion carries. Next up, treasurer's report. Patty?
Okay, so the report is through June, which is 9 months of our budget, or 75% of the budget season. So the income, again, our budget's 3.2, monthly activities around 11K. Majority was contracted services, it was actually SSTP income. And year to date is a little over 3 million. So we're about 122 short of the budget, or 96% of the expected income for the year at this time. As far as expenses, the budget's 2.8. We had about 60K in activity. Some of that reflected from the cost of the annual meeting stuff coming through, some dues, lobbyist stuff, which shows in not only the general fund, but also in the trails fund. So the actual expenses through June is 2.1. So we are, we have 713K of expense budget remains, or 75% of the budget has been utilized.
All right, could I get a motion in a second?
Washington County moves to approve the treasurer's report.
Can I get a second?
Chittenden County will second.
Thank you. Any questions for Patty on secretary or the treasurer's report?
Actually, I have one question. It's not really on the treasurer's report. It's on the SSTP budget. And I don't see Matt on. Is Matt on, Cindy?
Can we keep that for the budget discussion later?
Matt,
No, because it's on last month's expenditures.
I can try to answer. He is not. He's at, they had a funeral. And so anyway, he's not.
So I see we have almost 63,000 in law enforcement expenditures this month. So that puts us at about 116% of that budget line item. I assume law enforcement committee will review those expenses.
Yes, so it was under budgeted for last year because we actually, we ramped up law enforcement for this year. That money has been approved by the state of Vermont, so we do have approval for going over the budget.
Yeah, I was just curious which agency, where that money was spent, that's all. So we'll be in law enforcement.
Yeah, most of it was spent, a lot of it with Vermont State Police, but we will go over it with law enforcement and the governor's council.
Okay.
Thank you.
Any other questions for Patty on the treasurer's report? All right, hearing no one, we'll take it to a vote. All those in favor of approving the treasurer's report, say aye.
Aye.
Those against, nay. Motion carries. Thank you, Patty. There are no tabled items. There's nothing on the consent calendar. There's no old business. New business, insurance presentation, long-range planning. And
All right.
it's,
I'll take it. Thank you, Tim. A few weeks ago, and in each of the last several years, we received a non-renewal notice from our liability insurer. As you all know, we're required by state statute to carry liability insurance in order to operate. Each of the previous times that we received a non-renewal notice, we have been able to renew our policy, but with substantial premium increases. As you can imagine, this has been a major cause of concern each time it has happened. It also raises concerns for the future. At some point, will we not be allowed to renew? How high will the costs go, and what will the increased limitations be to our trail system? This year, we've also been notified that the underwriter of our policy is being replaced, which is the reason for our non-renewal notification this time. At this point, we don't know how or if this will impact our ability to renew our policy or how much of an increase we can expect to our premium. What we do know is that other state organizations use the same company and that they will be receiving the same notice. We also know that the market for the type of insurance we require is not always stable. In addition to these issues, our insurance company has not always sought our advice or input of any kind when dealing with claims. They have not always used counsel that is familiar with snowmobiling, and they sometimes require us to follow rules that don't seem to make much sense regarding our sport. The question is, what can we do to address these issues? The Long Range Planning Committee started looking for solutions over the past year or so. What we learned was that we're not alone with these issues, and that there are avenues available for organizations like ours. Specifically, we started to learn about insurance, and that led us to risk retention groups, or RRGs. RRGs are liability insurance groups owned by their members, like a credit union. The basic concept is that companies with similar risk profiles pool their risks. RRGs provide a lot of program control as well as long-term stability. It lets companies control their loss and risk management practices, as well as hire their own counsel. As for specifics on what an RRG is and how they are formed, our committee really isn't qualified to explain all those details. However, we're lucky because Vermont happens to be an international leader for these type of insurance companies. This has allowed us to tap some local knowledge as we look for insurance solutions. With us tonight is Christina Kinstedt, a managing director at Advantage Insurance in Burlington. Christina has 20 years experience with RRGs and other types of insurance and has been very patient teaching us about RRGs, the LRPC. In addition to helping us work through our insurance questions, Christina and her husband are also landowners on Cold Hollow Bearcats trails in Richford. So with that, I'm going to let Christina take over to sort of give a presentation about what we're talking about. Christina?
Thank you, Mark, for the introduction. Mark, shall I share my screen so people can see which slide I'm on?
Yeah, that would be good. Cindy, can you?
I'm the host now.
Oh, you're the host now? Okay, good
Yes.
job.
So I will share my screen right here. Can you see the PDF?
Yes.
Yes.
Great, thank you so much. Thank you for Mark for the introduction, and also in talking to Cindy and Mark, just a very brief introduction. Before I joined Advantage Insurance to start its Vermont office, I was with Willis Towers Watson for 14 years. Willis Towers Watson, for those who are not in the insurance business, it's the third largest brokerage house in the world. And I happened to join them at a particular time when RRGs were taking off. So I was in the right place and right time. I ended up leading the RRG practice at Willis Towers Watson for many years before leaving there. When Cindy and Mark contacted me a few weeks ago, we looked at different options. And RRG is a very specialized area of insurance, but it's not small. When you look at the RRGs in the country, of the 215 RRGs in the country together, they write $3.5 billion in premium each year. So you can see the volume that it writes. It's done wonders for the insurance, for the insureds, most importantly for insurers. Traditional insurance carriers, the AIGs of the world, don't like RRGs at all because it's taking the good risks away from them. So in front of you, we're looking at when I spoke to Mark and Cindy earlier, I said, well, just send me the information you have. Let me just analyze what you have. I know you're running into renewal issues. So when I looked at the insurance lines that you have to buy, about 97% of that can be written in RRG because RRGs can only write third-party business. It cannot write first-party business. 3% typical is workers' comp and property insurance and group accidents. So that's fairly small. So as we explore the pros and cons of each type of captive, it became very clear to all of us that RRG would be the best way to go. And we did a very simple analysis of your loss runs. So typically when you look at a losses generated by an entity like yours, we go back to 5 to 10 years. We take the premium you've paid over the 10 years, and we take the losses you claimed others have filed over the 10 years, divided by the premium you've paid over the 10 years. That's a very rough estimate of your loss ratio. And in your case, you're looking at a loss ratio approximately 21%. What that means is that about 79% of that is your profit margin. And obviously the insurance company has to employ a staff and also has to go through the brokers to reach you. But all in all, you're in a very favorable loss position. So anytime when we look at entities with a loss ratio of under 50%, they're extremely good candidates for RRGs or captives for that matter. When we look at the risk retention groups, there are some pros and cons. There are many more of them, but the ones that are really relevant to you would be, the pros would be the risk diversification. Is that insurance is really, we don't know which one of us will have a car accident tomorrow, but if you add 1,000 of us together, you know that a few of us would have an accident tomorrow. So that's what risk diversification is. You get a critical mass and someone is bound to need insurance coverage. The reason for the RRG is really the potential growth, because when you look at your premium, you're looking at an annual premium of about $233,000 paying into the program. That's not you can have a program on your own, and you hope that you wouldn't have a full limited claim the first few years. But you never know with insurance. That's the tricky part of it, is that individually, we don't know when you're going to have a claim, but collectively, if you have a few hundred or even just 5 organizations similar to VAST, you would have enough premium to cover everyone, because not everyone will have a claim in a given year. If you are going to have a risk retention group, you can skip the fronting fee, meaning that typically when you form an insurance company, because insurance companies' papers need to be accepted by your counterparty, and your counterparties are usually landowners or municipalities or other organizations. What they want to see is that, can this program directly write insurance? RRGs can directly write. So these are the pros. The cons is that it takes money to capitalize the RRG. In Vermont, the minimum capital is $1 million. That goes up with the amount of risk you retain in the RRG. Now, looking at the risks that you have, you can stay at a minimum for a while because your risks are fairly low. The administrative cost is high, comparatively speaking. A lot of that is really not related to the day-to-day management of the RRG. The management is just issuing the policies, underwriting it conservatively, making sure the premiums are charged properly. On an annual basis, this is what we file. It's 196 pages. It's got many data fields that are probably unapplicable to you, but regulators need to see them. So on an annual basis, you're looking at 200 pages. On a quarterly basis, you're looking at close to 50 pages. So that's where we as a captain manager would spend a lot of our work, in addition to promoting the RRG among the insureds. The con is that also, if you are to form an RRG, you could have full or partial control of the RRG, depending on how you want to set it up. And before we get into that, before we get into the recommendation, I always tell people that you can get in and you can also get out. So getting in is fairly straightforward. It takes, if we fully commit the resources on your end and our end, we can put together that package within 2 months, and we'll spell out all the steps needed on the following slide. And the regulators say they will need 2 months to review. But with a program like this has been tried and proven that it works. And you have the great loss profile. And we have worked with the Vermont regulators for many years. And Vermont is the largest domicile in the US. I would expect them to spend just 1 month to review that. That's getting in. Getting out, how do we get out of it? That if you ever need it, you very rarely see people getting out of captives and RRGs, because within a couple of years, they're going to see the benefits right away. Is that we're going to cease underwriting activities, meaning that we're going to non-renew the policies. And then we settle the claims that are outstanding. And other liabilities, the other liabilities are usually the taxes you will have to pay and the service providers you will have to settle with to shut down the program. And finally, you dissolve it as the members or subscribers of the RRG. Together, you sign an unanimous consent saying, hey, we the owners / insurers of the RRG, we have resolved to dissolve the entity. So that's the end of that. Our recommendation in talking to your office for the last few weeks is that if you could find a few other organizations, doesn't have to be snowmobiling organizations, you can expand it, call it something more inclusive, sportsmen or outdoors. Because when you look at the risk you have, your risks usually lie in the wintertime. Bicycling, sailing, boating, these are risks that are in the summertime. That's a pretty good diversification if you're interested in that. So the good thing about having other clubs join you is that you can grow your premium. They will have the same risks. They will have to pay these premiums as well. And in recreational sports, usually before people join, they have to sign release form anyway. So your risks and their risks are already very well defined. And with different sporting activities and also different clubs in there, that's where the diversification is. And the more you have, especially when the risk is good, the administrative cost will come down proportionally. Because whether it's just you in the program or you have 50 of VASTs in the program, we still have to file the same 200-page report. So that's where the cost comes down. And then since you are the one who starting the whole process, you could have first mover advantage, and you can make yourself the Class A member, and any subsequent members make them Class B, and you can decide that since you're contributing the seeding capital, you can allocate 90% or 85% of the underwriting profit to you, the Class A member, and then the others will be allocated 15% of the profit. So you have a lot of rights in the beginning, and you're putting into the work to obtain that kind of rights. How do we get started? And this is the formation process. And one key item I want to point out is that actuarial analysis, because your losses are not frequent. So there is a possibility that we could go to the regulators and say, hey, here's a loss runs going back 10 years. You see how infrequently it happens. Can we waive that fee? So if you do waive that fee, that's a savings of 10 to 15, and regulatory, there are some other fees. For us, this is we as a captive manager. We run everything from start to finish. And now in our discussion, we realize that it's much better if you keep your current legal counsel and your auditor to serve the RRG as well. And it doesn't look like they're currently approved by Vermont. And your legal counsel doesn't need to be approved by Vermont, but your auditor will need to be. And there are some other paperwork that we all have samples for. So we can work with them to get them licensed, approved in Vermont, and tailor the templates to meet your needs. The formation responsibility, and we will have very detailed discussion with your staff to understand your risks. So we can write a plan of operation. That's really the key of the formation, and the pro forma financial statements. We're going to say, hey, here's your profile. Here are the risks we have to watch out for. Here are the factors we can use to mitigate those risks. And if we do all of this, we can even lower your loss ratio from 21 to a smaller percentage. And this is how we make the underwriting profit. And this is how we benefit BAST to allocate it back to BAST. One of the things I mentioned in here is that to a reciprocal. A reciprocal means that if the underlying members are nonprofits, we'll have to allocate all of the profits back to the underlying members. Now you decide what percentage you get back. So by doing that, the RRG minimizes the tax burden, and the nonprofits don't pay taxes anyway. So when you talk to RRGs who are owned by nonprofits, they are always reciprocals.
Christina, can I interrupt for a second? We have a
Sure.
board member that's having trouble getting in, and your host.
Sorry, I am going to
Right.
let me make this bigger. Doesn't tell me which one it is.
There should be on the bottom, it says participants.
I'm still going. I can't scroll to the bottom.
Okay, now it would come in the top, it would show you a waiting room. He's going to try by phone. So if we could
Okay.
just pause for a second,
Sure.
couple of seconds to see. It's Mike Burns. It might say like Mike's iPhone or.
It's just I can't, because I'm sharing my screen. I'm having a hard time maximizing.
If you can stop sharing your screen for a sec.
Yeah, I'm gonna stop sharing.
Sorry about that.
No, that's okay. So what I'm gonna do is to go back to you to let you make host. I'm making you the host. So you.
All right, here he is. I see him. Admit.
Okay.
Wait. Bear with us, folks. Mike Burns, are you in now?
On the phone.
Okay, all right.
All right, thank you. Can you still see my screen? It looks like
Yes.
you can. Okay, all right, and then I don't need to take over the hosting. Coming down to the cost section, it is expensive to run an RRG, mainly because of the compliance burdens. But as I mentioned, you know, the more programs, the more clubs you have, if you add another 10 clubs, this will probably go up by $15,000. So it's the increase is not proportionate to the number of insurers you have. So that's the annual, we estimated that's the annual cost, and it will go up slightly, very slightly, as you admit more members. Which gets to this point, is that the last slide is that how important it is to expand the program. And we are fully committed to help you grow the program because the need is there. The other clubs are getting non-renewal notice as well. And if their losses are good, we will admit them. If their losses are bad, we can cherry pick, unlike a traditional insurer. So some states force you to take on insured. RRGs are free and clear to choose whomever they want to insure. When others want to join you, you can choose to charge them a capital contribution or not. If they don't pay any capital, well, we always ask for a small amount of capital contribution. So that way they've got some skin in the game. So they will behave. Others, if they have the financial wherewithal, they can certainly contribute another $250,000 or $500,000 in capital. And if they do that, obviously you will give them some dividends on an annual basis. And that's where the voting rights and the Class A, Class B, Class C subscribers come into play. What we're looking at, and we can change this, but for the financial control, the key to financial control is segregation of duties. So if VAST is doing the day-to-day paying the bills and collecting payments, we want to make sure that we're the ones who's going to reconcile the bank statements and vice versa. So this is where financial control is. Governance and compliance, we do all of that. We run the meeting, we plan the meeting, we put together the meeting book, and we make sure that you're aware that where the gaps are and how to close the gaps. Claims administration, initially, we expect to work very closely together with VAST, and there may come a point when you have enough premium, either you can outsource that responsibility to a third-party administrator, TPA, or you've got so much premium coming in that you can devote one person to fulfill that function, and we can help you to generate the loss funds. We have the expertise that we can share with you to make it work. Marketing, going to other clubs. The key is if you could make the introduction to other clubs, I'm more than happy to jump on the phone to walk them through the pros and cons, what it means to them. And it's going to be a much more extended version than this presentation. This is a very shortened version of what I typically present to prospective insurers. That's really the extent of my presentation. Any questions?
Christine, if I could just clarify, just so understanding, because the language that we use are associations. So when she talks about clubs, our clubs are already included in this. Okay. So she's talking about like the New Hampshire Association of Snowmobilers, the New York Association, the Maine Association, or other states, or other types of outdoor recreation, you know, could be ATVing, could be mountain biking, you know, this company would be put together by VAST, sort of run like the Snow Trails Conservancy, like it's its own company, but the board and everything is all picked by VAST.
Right. I wanted to, Cindy, I wanted to thank Christine, and I wanted to sort of give a nutshell in case people, you know, had questions about what we're actually talking about. And we are talking about forming a separate nonprofit corporation and insurance company. That's what an RRG is. As I said in my opening remarks, it's like an insurance company credit union. It's owned by its members. We would be the first member, and we would try to get other members eventually. We do have, it's self-insurance, but it's governed by state of Vermont rules on these, and that allows us to finance it a number of different ways, either with cash or with a line of credit or with a combination. And what we're looking at is the ability to control our own insurance future and destiny. You know, it can be a scary thing to look at, but like I said in my opening remarks, Vermont is home to one of the best in the world at this type of insurance, not just for RRGs, but for the more well-known captive insurance agencies. That's why we started looking at this, because it would give us control. Is there some risk to it? Yeah. But I think the risks sort of outweigh the risk of not doing it, because we don't know when, if, or how we're going to have insurance in the future. So, Cindy, do you want to add anything to that, or anyone else from the Long Range Planning Committee? Cindy?
No, I think you did a great, Carmen, I see your hand. I think you did a great job. And so bottom line is, right now we're paying $230,000 for insurance, and we're looking at it costing about $145,000 plus that money that we have to put aside. You know, that 1 million that we have to put aside, which the majority of it can be a line of credit. So it's actually going to save us money every year. And then as the one more point of clarification is that, as well, is that as a member of the RRG, we would own 51%. So even if we had, or we would tier the membership, we would still have the majority of voting rights. So we wouldn't be giving that power away by inviting other associations to buy their insurance from us. That's the only thing I can think of, Mark.
Yeah, you can certainly have more than 90% of the votes if you desire.
Yeah, and one of the things that I as a way of an example, currently the state of Vermont, for employees, the health insurance, they're set up similarly. There's a lot of differences because RRGs can only insure liability insurance and can't do health insurance, but the state of Vermont's employees have self-funded insurance. When there are years when the claims don't exceed the output, you know, the intake, they get insurance holidays. Right now, my colleagues who have state of Vermont health insurance don't have the next two payments, won't be coming out of their check because they've been given a rate holiday. So in an RRG, if we have years where we don't have any claims and there's profit, it is a nonprofit, but you know what I mean, profit, that can go back to rate policy holders in terms of what would it be called? Dividends, yeah. So there are advantages to this, and I know it's a lot to take in on a short presentation via Zoom, but we wanted to definitely let the board know what we've been looking at and what we're really seriously considering. So now I can't see everybody who has questions, but Cindy, if you want to call on people who have their hands up or have questions, I guess we're ready for that.
I stopped sharing, you probably can see more. Yeah.
Oh yeah, okay. Carmen had her hand up first. That's the first person I saw.
Can you guys hear me?
Yeah.
Yes.
No.
Sorry, I didn't know if I was on mute or not. So a couple of things, Cindy, so what would we be paying? You just gave that number and I missed it. I'm sorry.
About $145,000 a year to, and then plus we have to have that million set aside in case there's any claims.
Right, okay. That wasn't my question though. I have actually a couple questions. One, is there any penalty, so to say, I don't know if that's the right word, if we were to drop from the insurance policy that we have now? Is there a penalty that we would have to pay to do that? Or
Well-
can we just say we're out, we're done?
Well, right now,
There we go.
our policy ends September 1st, and as of this moment, we don't have a policy going after September 1st.
Okay.
Now, our insurance company is committed to finding us a policy, and if we don't have something in place by then, and we go with whatever is offered to us, oftentimes there is a penalty put into those for early cancellation. But we don't know what that is now, but we would know that going forward. That would be definitely one thing we would investigate.
Okay, that was my first part, like.
You're
first
next,
part of the
Julianne.
question. So my second one is, when you talk about other like groups, like the Mountain Trails Partnership or whatever it is, the mountain bike club that they have now, or the ATV club, VASA, do you know if they already have something set up like this, or?
Through our research, we
we
haven't
could do
found
that?
we have not found a similar group for our specific types of activities. We have found there's an association of nonprofits, but looking through who their RRG insures, we didn't see any groups similar to ours or outdoor recreation. And we've seen some hang gliding groups. A hang gliding group has one, which assures hang gliding operatives, flight schools, and some things like that. And they're based in Burlington, but nothing like ours.
Yeah, I happen to know that one fairly well. It's called the Recreation RRG. Because they're in hang gliding, their risks, their limits are higher, and they can't afford to capitalize it to a level to retain all of the risk. So they have to go to the reinsurance market.
Right.
And that's where it got really expensive for them.
Right. But that exists. But those are the only groups that we've found that are really similar. And today online, I found an insurance company that claims to, but they're an insurance company that claims to write trails insurance. They're a brokerage out of San Francisco and Phoenix, but nothing like this. So if this happens, we would like to be able to say to other groups, hey, come join us. Here are the benefits. And then that helps us spread the risk out among a larger pool. So.
Okay, so two-part question. This is my last thing. One, are you looking for anything from the board? One, and then my only concern was if our policy is technically up as of September 1st, according to the presentation that Christina just did, this takes 2 months to set up and 1 month of review, if I just saw that correctly in the presentation. So that's 3 months and we're into the end of July.
Yep, we recognize that, and we are working on alternatives to. There are a couple of alternatives. One is possibly getting a short-term extension of our current policy, which our current insurer doesn't seem to think would hold much. The second is just renewing, and depending on the penalty, maybe just swallowing that. But that's not what we want to do. So we are actively working both ends of the candle here.
Okay.
So
is there
And
anything that you need from the board?
Yeah, that's what I was gonna,
Go
so
ahead.
yes, because we felt like in our discussion that this should be a decision made by you guys, because this is about, the organization itself. So I feel like you don't have to go back to your clubs and all that. Like, this is about VAST, and this is a decision about the operations of VAST. They will be covered. And the nice thing about this is we're writing our own risk, like Christina and Mark mentioned. And so we will be able to say what we feel is a risk and at what level and what isn't. But we would need, we would need a vote from the board.
So one
Julianne?
other, oh, sorry, go ahead, Mark.
Julianne, you had a question?
Yeah, it's just a quick question. In the past with our insurance, they chose, you know, I know that Cindy in the past had worked really hard when there was a claim for an accident, but she just ended up being really frustrated. In this kind of environment, would we be able to hire a lawyer and all the footwork that Cindy does that,
Yes.
you know, if it's our fault or our club's fault, that's one thing when it's an error, but if it's not and it's somebody just going after VAS because they think they can, that's something we can address.
That's to me,
that's huge.
That's the main point of this.
Yeah.
Increasing premiums, yes, that's always an issue. But to me, that's the main pro to something like this, is that we control it. We set the rules on how we handle these things. And it's not about never paying out a claim,
right,
denying everything. It's about us being allowed to defend ourselves and our clubs in a manner that is fitting to us and makes sense to us, not based upon calculations of an algorithm that say, well, you know, and then pass those charges back on a straight premium raise. Now, it doesn't mean that as soon as we get this, it's the Wild West and you can do whatever you want and you're covered.
No.
That doesn't. We actually have to be more
diligent,
adhere closely to risk management. We have to pay more attention to that. So, but yes, that's the main thing.
Perfect. Thank you.
Carmen,
you own the insurance company, so you decide who's going to represent you.
right.
Carmen, and then Michael's iPhone. I think that's Mike Burns, and then Kurt.
Okay.
Just a quick question. My only other question is, because we have to have that kind of $1 million, where would that money come from? Are you guys looking at like a line of credit? Sorry, that's the word I was looking for. Sorry.
Well, see, we would do, one of the things about an RRG and in the captive world is that any cash you put in can be invested in a number of ways, whether it's a loan back to the organization or however. So we would be looking at probably a combination of cash and line of credit, depending on what the rules and rates around a line of credit are. We just cleared and did away with the line of credit we have, so we feel pretty good about being able to get one to cover this. So that's, we would not take every dime that VAS has available and sink it into this and then try to scrape by operating. That would, if we thought that was what it was going to take, we wouldn't even be proposing this.
Just so you know, one of the most successful RRGs called a nonprofit affiliates, they got started with a $5 million grant from the Bill and Melinda Gates Foundation as their capital. So grant money is a possibility if you look in the right places.
Okay. Mike's iPhone?
Actually, it's me, Mike Garber. Can you guys hear me?
Oh, yeah.
So a couple of questions. Cindy, you threw out that $145,000 number. Would we also have to hire somebody in the office to manage this new insurance company?
No, the management in that $145,000 is Christina's company. So they basically manage this for us. The only thing that we would have to do is I would have to be on the board. And I'm assuming that someone from VAS, probably me, would have to be on the board. And then Sheila would do any of the checks. But again, that's just like an annual billing, like once a year. Like if we got other outdoor recreation associations, let's say we had like 5, let's say our goal was 6 and we had 6 others that joined us, once a year we would be billing them. So it's a very minor amount of work on our part.
And also in terms of claims,
and then, oh, I'm sorry, and setting up
processing claims. I was going to say, in terms of ongoing operation, processing claims, our claim history is pretty small. We don't even average one claim a year. So in terms of processing those, Christina's company would help us develop a process for processing them, and that would be handled by VAS staff as well.
Yeah, just to clarify, that $145,000 annual fee includes everyone, all of the service providers. Our share happens to be about half of that because of the formation, and not just the formation is separate from this, the amount of regulatory compliance work associated with it. That work does not increase proportionally with the number of insurers you're going to have. So the more insurers you have, the smaller the administrative cost component will be.
Right, because that includes like licensing fees and
everything,
examination fees, audits, so all of that, and the more members you have, if it was 5 members, you would divide that 145,000 by 5, so each would be there, and maybe at that time you charge annual fees in order to build up your pot of money and get away from having a line of credit. Maybe you want to just have that in cash, so maybe over time you replace that by charging premiums that go into that. There's a number of ways to fund that.
Got it. Got another question. If we got other organizations to join, do they have to be Vermont organizations? Can they be countrywide organizations, worldwide organizations?
Nationwide.
Nationwide and not worldwide.
Yep. Okay. Yeah, that's fine.
Yeah, well, they can go to Puerto Rico. That's fine. Yeah.
And the other one last thing is we would probably have some startup fees for Hans because we'd want to review all of our waivers and things like that, and so there'd be, maybe $10,000 or something out of the vast budget to pay for our own attorney. But again, as far as representing us, if there was a claim, that's when we can hire our own experts and our own snowmobile specific attorneys for stuff like that.
Cindy, would we have to also put together like a board of directors for this company?
Yes, we would have to do that. We'd have to file the articles of incorporation with the Secretary of State, create the, I'm not sure what nonprofit it falls under. Is it a 503 organization? Those things I'm not 100% sure.
And that's the from A to Z we're going to walk you through.
Right. I saw a phone number down there who looked like they wanted to say something, 316-66106. No, guess not. Are there any other questions while Christina's with us?
Yeah, Mike Garber again. So
thanks, Mike.
Just on the, I have to ask, what's the liability if something goes wrong? We have 10 accidents in a year and it totally, blows us out of the water. What happens then?
Yeah.
Well, that's where you need to have the capital to back it, and that's sort of why the examination of our claims liability comes into play. The industry has standards in what and while they're not 100%, they're based on actuarial tables and likelihoods. They look at your claims history and they go back for this. I think, Christina, you said 5 years. And in the last 5 years, we've had 2 claims and we've paid out, I don't know. So going forward, we assume it's going to be similar. And there could be a worst case scenario, but even if that was the case now with a regular insurance company, if we had 10 claims and they were all for $2 million a piece, we aren't required to have that much insurance, and we don't have that much insurance. So the risk based upon the history we have is not much different than what it is now.
Couple of observations, and even with your commercial insurance policy, typically there's a per occurrence limit and there's an aggregate limit. So I would not be surprised if your current insurance company limits the aggregate, meaning that you can probably file 2 or even 3 full limit claims, but anything over that, you're on your own. And that's pretty standard for the insurance company. So
And that's it exactly. So the position we're in isn't a lot different than it would be. The position we would be in is not a lot different than it is right now.
And the number of accidents per year is irrelevant. It's the number of lawsuits per year.
Right.
Yeah, because a lot of accidents don't develop into claims at all.
Right. A lot of them, you're right. And I would say the majority of accidents in Vermont don't develop into claims against VAST for negligence. And that's really what this is.
Yeah, and that's where risk management is extremely important. I have a client a number of years ago that something bad happened that could easily develop into a multi-million-dollar claim. What the insured did is that they actually assigned a person to drive the potential plaintiff to a Thanksgiving dinner. So just to build a relationship, and the potential plaintiff just can't bring a lawsuit in the end. I said, these are good people. It was an accident, and pay me what I suffered and what I lost in wages, but I don't want to sue you for anything else.
So, and that's really some of the flexibility we're looking at. We're looking at sort of making our own rules, but it's also one of the reasons why I said we'd have to pay more attention to our risk management and our policies and making sure our clubs are following, the signing guidelines and things like that so that we limit our exposure. Are there any other questions while Christina's here?
I think Stan's got a question.
Yeah, maybe less of a question and more of just an observation is that in this scenario, in the claims that we have had against VAS in the past, because the insurance company didn't do a good job defending us in those scenarios because they didn't have the people in place. I think in this scenario, we would be able to choose a better defense.
Absolutely.
So if there are no more questions for Christine, we can let you go, Christina, and thank you very much for being with us tonight.
Thank you for having me.
Thank you.
Thank you very much.
And then
Thank you.
Yeah, have a good night.
Thank you.
Bye.
So, Mark,
go ahead, Carmen.
are you looking for a vote from this board tonight?
Cindy?
Sorry.
I would say that if someone would like to make a motion, I mean, we should get the ball. Does everybody feel good about this? I mean, are people ready? Do they need to think more about it? I mean, I will say that about like the claims and stuff like that, we do have a limit. We're allowed to write our own limit with this company, and we do have an aggregate. So we've got a $3 million policy with a $6 million aggregate right now.
And that's above what we're required to have.
We're only required to have $1 million. Yes.
So I want to be clear what this is. This is VAST forming a separate entity to insure VAST with the hopes of gaining other organizations, be it the New Hampshire Snowmobile Association, the
VASA,
Idaho Association. And by the way, Cindy did a lot of research with other organizations around the country, and the state of Washington already does something similar with captive insurance, which is slightly different than an RRG. And again, it's a lot of information to take in at a time, and I want you guys to ask any questions. I want you to Google what an RRG is and sort of read some of the things that it is. My best analogy is that it's like it's the insurance version of a credit union. A credit union is something where people pool their money together to save and invest and loan out and help a group. And that's what an RRG is. It's something where we put our insurance premiums, what we would have been paying for insurance premiums, together to control our risk and control the rules that govern us. So Roger, you have a question? I see you unmuted.
Sure. What does this mean for our water crossings in the state?
I knew that was the question you were going to come up with. So
I was going to ask it.
our hope is that it means that with governance, we couldn't just say it's Wild West again. I just want to make sure of that. But I think that it would mean that we would be able to allow them. It would mean that we'd have to look at our, make sure that the waiver that we have people sign is ironclad and meets, because Vermont's pretty strict about, I've been reading a lot about that in the last couple of days. But I think it would mean that. It could mean we could insure events like radar runs. It could mean down the road, we could provide liability insurance that meets state minimums for snowmobilers. It could mean a number of things. The immediate thing is we would never cancel ourselves for insurance, and we could control costs and how we're treated in courts and with claims. That's probably not the 100% answer you were looking for, Roger, but does it help?
Yeah, for sure. I mean, I certainly wouldn't call us the Wild Wild West. We're kind of the Wild Wild North, to be honest with you.
Right.
But no, I mean, I think that's great. And I'm not opposed to making changes to the water crossings at all. I think that we need to, at all mitigate risk. And if there's signage / language / waivers that we can do to help with that, I'm in favor of that for sure. And even if it comes down to, I know there have been issues with some of the clubs having trouble making sure that the water crossing signs are up, or if we continue with those, if we need to hold the grooming contract at ransom in order to make sure that gets completed, then it is what it is, so if we're in charge of managing our own risk.
Exactly. That's the hope, is that we can do that. And it would take us, there's a number of other things that goes into whether waivers are enforceable here in the state or not. But one thing's for sure, we can say to people, as here's an inherent part of snowmobiling, and we can't take any liability for conditions changed by weather or stuff that's out of our control. And that type of stuff can be enforceable in the state. You have to make sure, and like Cindy mentioned, Hans would have to really, our attorneys would really have to go through everything with a fine-tooth comb, because there's a lot of case law on this type of stuff. But it is very likely, that would be the upshot immediate. We form this, we can say whether that's too risky or not, and we don't want to do it. And again, that's why I mentioned not just the water crossings, but radar runs used to be then, and the insurance companies wouldn't insure those, or it was really expensive. And even, my thought was down the road at some point, because RRGs can only insure liability policies. Well, that's all that's required to ride, get a TMA in Vermont, is that you have liability. As long as we could write a policy for individuals that just covers liability, to the state minimums, that's something we could think about offering, which might bring more memberships, because, that's one of the reasons that people didn't like being here, because they didn't want to have the liability insurance. We could not do the property, the casualty, the collision that most people have on their sleds, but we could do liability. So there's a number of reasons that once we form this and we get our feet wet and we're up and running, we can look at for expanding the operation. The other thing, which is again not in the front of my mind, is this could be a profitable operation in terms of returning dividends to VAST if we get other organizations involved, because then we reduce the amount we have to put in each year, and if their risk profiles are similar, that means we're not paying out as much as we're charging in premiums, and we get a dividend each year plus, a management fee or something like that. But those are things we have to think of after we get it going. Kurt?
So with that being said, would this entity separate, because VAST is laid out as a nonprofit organization. Does this separate entity, does that change that status from nonprofit to something else? No,
it's a nonprofit. And I'm just not sure what exact classification is, whether it's 503C. There's like 19 different 503 types of organizations. And most of our snowmobile clubs are 503C7s, which are social clubs and stuff. I'm not sure exactly what this means. What a nonprofit means is that the profits don't accrue to any one person or any stock specific, but they can be paid out to. It doesn't mean you can't make a profit. It just means that how the profits
right. Well,
are
we can put it into our general fund and dispersion. Utilize it somehow, but. I think the whole program sounds really good. It gives us a lot better control over investigations to claims, which to me is number one is huge.
Right.
It sounds like a really good way to go. We're going to start up as saving money, and we've got other states that are going to be in the same.
Stan, you'll be next.
So
Doug, I'm sorry, Kurt.
Okay.
Doug, did you have a question? Doug Jacobs?
No.
Okay. Stan?
So did you say that we've been notified by our insurance that they're not renewing for next year?
Yeah, it's become an annual event.
You're right. It's their typical game where they're going to come back and say,
well, no,
okay, we'll do it. But
there is a difference this year. Nationwide is no longer using the underwriting company. They're going to a new company.
Okay.
And we don't know what that new company is. They could be a bunch of insurance people from Dallas, Texas, who never have seen snow. This is the thing we want, is the control here.
Right. So has there been any discussion with any of the other associations like New Hampshire or Maine at this point?
No.
As to whether they'd be interested?
We have not jumped.
The last part of it, and again, it's more of a thought than a question, but it seems like it is a very, very tight schedule to get this thing accomplished for this riding season, potentially. And I think it's a great idea. There's an awful lot of positives there, but I just hope we take our time and not get into something out of haste.
Right. Well, so there are a couple of possibilities that we've sort of discussed and talked about. One is because VAST has a good reputation within the state. The regulators in this state are world renowned, literally, in the world of captive insurance and in RRGs, as being efficient and very fair and good. There's every possibility that we could not get this approved until the end of September, but they would grandfather us back to the beginning of September when our coverage ends. That's a possibility. And personally, I don't like trading on our reputation like that. I want to save it from when it really matters. The other possibility was getting our current insurer to extend our policy temporarily until December 31st. The broker that we have now doesn't seem to think that is likely. So that may not be an option. The third possibility is that we just, because Peter or Ricker, whatever they are, and Ricker Insurance, they have said that they will have us insured by they'll have a policy for us by September 1st. However, there's oftentimes a penalty for canceling early. So depending on what the cancellation policy is, we may not want to do that. It might be too big, or we might want to just say, you know what, it's $10,000. We got to chalk it up as to the cost of doing business. Or the possibility is we invest in this so that by next September 1st, when our policy comes due and they say, hey, we're not insuring you next year, we're not renewing, we can say, fine, we've got this.
Yeah.
Now, we don't want to let them know we're working on this, because then they will specifically slip something in there for a huge cancellation penalty. We also haven't talked to other states yet because we weren't sure the reception we'd get. We weren't sure when it would be done. We didn't want to tip them off to doing something similar, because if we can be the first and do it,
Exactly.
and I'd rather do that. Now, the likelihood of them being the first is minimal, because like I said, Vermont is the captive / RRG capital of the country. So really, and that's sort of how we thought of this, was because we knew that there was an insurance sort of hub here. So those are the things that we've thought about in terms of going forward, because that was the first thing when Cindy and I really started getting the gears together on this and talking to Christina, that we thought of was that, man, it's a tight deadline, September 1st. So
yeah. Well, I mean, it's I guess it wouldn't be the worst thing if you had to live with one more year of insurance through the traditional channels and have the time to build this and be ready for it. So like you say, next September, it
would just be the investment. It'd be the investment of the money now that we would have to pay
to get it started.
Yeah. Are there any other questions?
Yes.
I have a question.
Who is it? Was that Roger? I heard Roger. Who else?
Roger, Mike Garber, and Mike Burns.
Okay, so we'll start with Roger, then we'll go to Mike Garber, and then Mike Burns.
So I was going to make a motion to move forward with this, but I guess my question is, why, if we have workers' comp insurance to cover the employees, why is it such a big deal if our trails are closed that we're missing or we're without insurance for the month of September or even October? And then on top of that, I'm fine with moving forward with this new insurance company and then moving to the RRG next year, but not if it comes to the cost of increasing our premium by $50,000. So I guess I'm like in limbo here as far as what we should do.
That's understandable.
So,
go ahead, Cindy.
So you can do both at the same time. Like my suggestion would be to go ahead with Advantage and work to get this started. And then look and see what they give us in September. I mean, we'll be getting it actually in a few weeks, probably, or in a month, whatever the renewal, the new policy is going to be with the cancellation in it. But I think we should get the ball rolling if this is the direction you want to go. As far as our insurance, we have clubs out working on trails right now, Roger. So it's not just snowmobile season. As you know, you guys are out, other clubs. So it's covering those volunteers all year round, and the landowners and stuff. And the thing about this insurance company, so right now we're insured by K&K in Scottsdale, and K&K is dropping. They're dropping Scottsdale, Nationwide, and National Risk or National something or other. I don't remember. There's 3 companies. They're picking up a new company called Markel, and that's who they're going to be writing us up with. And the Markel, from what Peter Ricker has told me, they do not right now insure any snowmobile associations. So our insurance could be the same that we pay now. It could be $50,000 less, or it could be $200,000 more. We don't know what they're going to give us. So that's all I got.
Mike Garber. All right, Mike Burns.
Yeah, I might be asking the same questions. I did miss pieces of it here, and some of it I think with Roger. This is just our liability. All of our other insurance is in place, right? Doesn't impact any of that.
No.
And the second thing, I mean, we're talking about a huge change in coverage level going from 6 million to 1 million. I mean,
well, right now we're required to have 1 million, and we've actually ourselves made the decision to have a higher level. So you're right. It is a change in coverage levels. Historically, we haven't, over the past 5 years, which is the window they look at, we've had $350,000 in claims we've paid out, or 380, something like that. So that's what insurance is. It's a game of numbers. It's a you know, that's what the actuaries look at, is what's the likelihood. Now we all know that can change with one
season.
We absolutely know that. And the goal would be to build our pool over time, whether it was through investment from other organizations, or to build it ourselves with annual premium, putting our premiums there in addition to our management costs. So we get that. We understand that. And so we're not going into that blindly. But right now, you know, we're insured for more than we are required to. And going forward, we would be insured for what we are required to be insured.
Now, if we take our existing insurance and we went to the 1 million rather than 6 million, what impact would that have on it?
They won't allow us to go back. We've already asked. We asked last year.
Okay.
I'm still here. I have a question.
All right, Mike, thank you.
Is there a state perspective on what we're about to do? Do they care? Do they not care?
I haven't specifically talked to someone from the state, but then
I did.
You did? Okay, so there you go.
Well, I did. Some of us met with state regulators, the guy that heads up finance and regulation for the state of Vermont. And I think, Mark, you were there. We met about 4 or 5 months ago.
Yes.
And we mentioned this as an option. That was why we got in touch with them, was to talk to them about our insurance, whether the state would cover us or what captive was like, our RRGs, and did it make sense. And so they're very aware that this is on our radar, and that, and they said that they thought it would be a good idea. You know, that they are aware. Yes.
Just an idea. You should have the state match whatever we put up. And if we have $1 million coverage, they should make it a $2 million coverage.
Yeah, you know, that we are not part of the state. We don't want to be part of the state. We don't want to be a state agency, and the state wants, frankly, nothing to do with us in terms of that, because we had those discussions too, because there is a piece in statute that says, I forget the exact wording, but would lend you to think that they could actually cover us under their liability insurance, but they have no interest in doing that. That was made pretty clear to us.
Basically, you guys have got to make a decision. We either got to move forward or we got to pay the fees of the next company.
Okay, I've got Pat, and then I've got Ivor. Pat?
Cindy, since we're running this program for the Department of Forest and Parks, have we been in touch with Jessica or anybody from that group?
The lawyers for the Agency of Natural Resources and the Agency of Transportation were on the call with us when we met with the Agency of Financial Regulation.
Ivor?
So, yeah.
Yeah, Mark, it seems exactly what we've been, talking about for a couple of years, trying to move towards. Just wanted to thank you for working on it. Seems like this is a big move in the right direction.
Big move. Kurt, did you have something else you wanted to add?
Hand up.
No, I'm good.
Anybody hear me?
I'm very much in favor of it.
Okay, go ahead, Lewis.
I make a motion. We have the committee move forward with this, please.
Second, Orleans County.
15 minutes of everybody repeating themselves.
Absolutely.
Thank you.
Any further discussion on the motions?
Cindy, I'm sorry.
Hearing none, we'll take it to a vote. All those in favor of moving forward with the RRG insurance, say aye.
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 Aye. Those against, nay? Motion carries. Thank you.
That was Addison and Orleans.
Yes.
Yes.
Thank you.
Mark,
I know it's a lot for everybody to swallow, but they've spent a lot of time digging into this, and it's time to move forward.
Well, and like I said, I really encourage you guys. I really encourage anybody who still maybe has questions to Google Risk Retention Group, Google RRGs, and find out what you can about it.
And we will send out that presentation that Christina did. We'll send it out to everybody, okay? So you guys will have it.
Thank you very much.
Thank you, Mark and Cindy. All right, bylaw update, Jeff.
Okay, I'm gonna try to make this fairly quick, seeing how we're already at 7:15. Sorry. Went through and did some modifying of the bylaws to cover a couple of different things. The first one is on page 2, if you guys got your packets.
Yep.
Under Article 2, Organization, Section 1, adding the verbiage, for a county to be eligible for vast grant and aid funding, the county director or alternate director shall attend a minimum of 10 board of director meetings. Item B, the county director or county president shall provide the vast office contact information for each club within their county.
Makes perfect sense.
I'm trying to see, because I've got a gray
Yeah,
version.
just a quick thing. Do we have to say whether electronic or in person?
That comes up a little bit later.
Okay, thank you.
Matter of fact, I think that is the next section. Next section was section 3.
Correction.
Yeah, it looks like it's 3.
Article 3, section 1.
Bottom of page 4.
Bottom of page 4. TMA shall be available through local VAST affiliated snowmobile clubs and their agents using the VAST website and complying with all requested signature confirmations. Local club county dues shall be included in the cost of each TMA. So basically what that does is covers the clubs that want to help their members do it or still have their vendors do it for them. Then the next paragraph, certain categories of TMAs may also be purchased directly online through the VAST website. So this is some of the stuff that we kind of left in limbo last year until we kind of got stuff up and running. And then a little bit farther down on page 5, volunteer TMAs will be distributed through the VAST office based on a pre-qualified list provided by each club. No club county dues will be collected for the volunteer TMAs. Being pre-qualified by the members club is a statement of their good standing with the club and eligibility for all club benefits and voting privileges. So basically that says that if you're a volunteer member, you have all the same rights as a paid member of that club.
Yep.
Let's see. Section.
Section 3.
Page 6.
Page 6, section 3.
Yep.
Basically getting rid of all the reconciliation stuff.
Yep. Makes
Which we
sense.
don't need anymore.
Yep, makes sense.
Page 8. Article
Page
5.
8. Section 1, meetings and notices, annual meeting. All efforts shall be made to hold the annual meeting in an in-person format. However, video conferencing or other arrangements may be employed to conduct the basic requirements to comply with the association bylaws. Minimum requirements would include voting on the annual budget, bylaw amendments, and election of officers.
So hang on just a second. So does that mean by video conferencing, they have voting rights through video, or is there another arrangement? How do you handle that so that you can do it that day?
Yes.
Good point. How do you conduct that, Jeff? I'm just asking. I'm not trying to be a pain in the ass.
You can vote. I mean, Zoom has the ability to vote. If you click on more, you could do it by sign a show of hands, so they raise their hand.
Yep.
The thing is election of officers is required a vote by ballot. So the only way you could do it this way is if somebody's motion was for the secretary to cast one ballot.
Ballot, right.
Right.
So if somebody were to be nominated from the floor and it became a contested election, then how would you handle it, right?
Email?
No, it could still be done because the motion could be the secretary cast one ballot and you can list the position.
Yeah. And if there
True,
were,
so does that mean somebody's got to manage a website or a page so we can see what's coming in?
you could do it right on Zoom.
You could.
There's software out there for it, and you can do it on Zoom. You can do a poll. You can do all kinds of stuff.
Okay, I'm not trying to be a pain. I'm just, how do we facilitate it? That's all.
Not trying, but you are.
There's software out there, so you
Well,
could say,
I don't want to let you down, buddy.
there's software out there, so you could actually say, okay, so-and-so club, you have 10 delegates.
Yeah.
And here's the password for each one of those, each delegate has a different password kind of thing. So you could know how many votes, who was voting, not what person was voting, but what club was voting. There's ways to do it for sure.
This just gives you the possibility of doing it. The technical part of it can come at any time.
Yeah.
Right.
Well, I just want to make sure that we're prepared to deal with it if somebody requires it. That's all.
Well, that might speak to whether or not you're offering the a hybrid annual meeting. It might make more sense as long as we're able, like last year, we were able to hold the annual meeting live, that it wasn't shut down completely. You don't offer a hybrid. Say it's going to be live. We can have either X number of attendees in the tent, or like you did last year, offer the stay in your car option. But just think about that moving forward for the annual meeting. Doing a hybrid meeting might be more difficult, but you don't necessarily have to do it either. Hopefully we'll never have to face that again.
Right, but the possibility is there if we need to.
Yep.
I'm just trying to get it in there so we're covered.
Yeah, no, I'm just trying to figure out how we're going to do it because you've got a year if they voted in this year. So you got a year to figure out how to make it happen. That's all.
Right.
We've done worse.
Oh, survived it.
Page 9, section 2, Board of Directors meetings. Adding C, meetings may be conducted via video conference, in person, or a combination.
Maybe or might be.
Excuse me?
Well, it should be maybe, but it says might be.
Well, there's one of the typos that I was told I had, so I guess mine's a word, so it didn't show up as a typo.
We'll forgive you, Jeff. It's a haircut. It's a fast haircut you got. You were going too fast through it.
Don't bother. I'm beyond forgiveness. And then that just follows down through the other types of meetings that we have. Section 3, section 4.
Section 4, correct my to may.
No? Oh, section 4, yes. See, section 3 was right though.
Yes, it was. You did all right.
That's funny because
one for 3 is not bad.
Because I copy and pasted the same one, but
There's
I think that's it.
Like yeah.
There's a few spelling typos, but other than that, I make a motion, we approve the changes. Or
Kelly would second that.
recommend the changes to the membership of the bylaws. Because the membership has to ultimately vote on this, correct?
Correct. Yeah, I just need your approval to get it into the.
Washington County seconds.
Yeah, there's just a couple of further up, there's some like spelling typos, but other than that.
We'll straighten those out.
Any further discussion on the bylaw updates? All right, hearing none, we'll take it to a vote. All those in favor of approving the amended changes to the bylaw updates, say aye.
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 Those against, nay. Motion carries. Thank you, Jeff.
Thank you.
Fiscal year 22 budget review and vote, Pat and Cindy.
Okay, so I think it should say Patty and Cindy, but
Oh, it does. Sorry,
anyway.
I was speed reading it. Sorry.
I don't have anything else to, I mean, you guys have had it now for a couple of months, and certainly in this past month, there haven't been any changes. There's been some questions. Roger, I see your hand up. So yeah, I'll just go to questions unless Patty, you've got something. Okay.
I sat through the budget presentation that Cindy gave. It was very in-depth, line by line. So that being said, and no questions coming from my county, I'd like to make a motion. We move forward with presenting this budget to the membership.
Chittenden County would second.
Thank you, Pat. Any further discussion on fiscal year 22 budget review and vote? All right, here none, we'll take it to vote. All those in favor of approving the fiscal year 22 budget review and vote, say aye.
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 Those against, nay. Motion carries. Thank you.
I think this is great. I promise to have next year's budget 2 months early too. No, I like the idea that you guys have enough time. You need to have enough time. And it will say in the annual report this time, the year end and projected year end for this year. So what you see is what's going to be in the annual report as well.
Perfect.
It was super helpful for me, Cindy, to have it line by line ahead of time. That way I didn't have to ask and spend time during the board meeting. You know, it was nice.
That's awesome. Great feedback. Thanks so much.
And we didn't even color code it for you, Roger.
Well, the paper
Color-coded
version was
mine.
color coded.
Mine's
So-
all color coded, Roger. My breakout sheet of line by line.
He's talking about the red and green of where we came in, and that was originally, but we had to take the colors out for the book.
I'm a fireman. I need things in color, and I appreciate that. Thank you.
We all move forward a little bit every year. All right, Vermont Snow Trails Conservancy funding, VSTC. That be you, Jim?
Yes, I guess it would be. We were looking at the Snow Trails Conservancy. We were looking at back in 2017, there was an approval by the board to approve up to $2 per TMA funding for the snow trails if we exceeded budget, which this is a year that apparently we have some carry forward funds. So the Conservancy was looking at asking for a $2 per TMA a donation to the Snow Trails Conservancy.
So do you want me to do a little presentation, a real quick one? Okay. So we know we have some new board members and some new folks. So I'm going to share my screen and show you some things real quick here. Website. Okay, so the Vermont Snow Trails Conservancy has a page on our website, which is right here. And this tells you all about what we do. It is a separate organization that was started by VAST, and it's a volunteer board of trustees. I'm the vice president. Jim's the president. They're all listed down here. Pat Poulin's the secretary. Mark Ellingwood's the treasurer. Greg Rouleau's on there. Stan Schwinair and Frank Stanley. And what we do is we try to get easements to help sustain our trails. And there's a video. So if you want to know more about, if you want to learn more about or share at your clubs or with landowners, you can watch a YouTube video that we've put together about the Vermont Snow Trails Conservancy. And then on the bottom are all the forms that we use when we talk to landowners. And we actually have a really nice folder that we can send you, and we can print all these forms out and put them in the folder, and you can present them to a landowner, or you can just show the landowner on the website. So this has been on our website for years. The Snow Trail Conservancy has been in existence for, I don't even, like a decade, if not longer. Again, so this is a page on the VAST website called BSTC. And this is what we do. And I'll give you a little bit more background because I'm sure there's going to be a few questions. So currently, so VAST started the Vermont Snow Trails Conservancy with $150,000. Currently, we have $86,000. We have about 12 easements around the state, including, or in addition to that, we also have some that are owned by other land trusts that like they needed to buy an easement for $150,000 and we gave them $10,000 because we have a trail across that property. And so we're written in that contractual easement, like Vermont Land Trust, things like that. What else? I'm just going to get out all of it and then you guys can ask questions and I'm almost done, believe it or not. So we were looking at, if it was $2 per TMA, that would mean $44,650 that the Snow Trails Conservancy is asking VAST for funding. Again, we have not come to VAST since the formation of this organization. We also have land that was donated to us, and currently as well. We have one property in Cambridge that we own that was given to us last year. So that's in addition to the easements that we have. And then if you're, just so you know, on the budget, right now I'm projecting about $195,000 of revenue to go into reserves this year. So that 44,000 would come out of that reserve number. It's not out of the budget, it would come out of the reserve. The number that would go into the reserves. The $5 that goes to trails that's already taken out. So that's not even included. That's a done deal. I know I was just talking really fast, but that's all I have. And I'm sure there's other questions.
So Cindy, are you looking to do the same thing with those as we did with the 5, or you just want to pull a number out of the budget?
Well, the motion that was made a couple of years ago was that if we had a good year and there was money left over, if we'd gone over the budget, that the Snow Trails Conservancy could come and ask for up to $2 per TMA sold that year.
Yes.
So that's basically what we're asking for the board to consider.
So this is a yearly thing, and if we do it this year, it doesn't mean we're signing up for it next year, right?
No, that's why we haven't done it since the motion was made. The motion was made a few years ago, 3 years ago. So yeah.
So it's just through the board motion and approval, not a vote?
No, it wouldn't go to the membership because again, the board also votes in September after the annual meeting. That's when you guys sit down and vote where all the reserve money, like which account you're going to put stuff in. It would be the same at that time. And you could wait until then to make that decision. You don't have to make it right now. You know, you could wait and make it that day, you know, at the annual meeting when you have your board meeting, you know, after the annual meeting.
Cindy, how many TMAs did we sell? I'm sorry.
We sold a little over 22,000.
Patty.
And again, this isn't every TMA. These are the TMAs that were sold. This doesn't include volunteer numbers or lifetime members or anything like that.
Okay, well, I was just trying to do the math because you said originally 150 and now they're down to 86. So that's 60, a difference of 64,000. And I just did 22 at $2, that's 44,000. So that would bring them close to that original amount.
You're talking about two different things, Carmen. You're talking about the initial funds that were in place for the Conservancy to use to pay for the legal fees, pay for surveying. That's that $80,000.
Yeah, it was originally 150 like a decade ago.
Okay.
And currently we still have 86 of that. Okay. The 44,000 is the number if you guys decided to give the Snow Trails Conservancy $2 for each sold TMA. That's the 44,000.
Actually, 44,650 at $2.
Patty.
Yeah, so just in full disclosure, because I was talking with Sheila and then Cindy about this, because I don't see, and Cindy kind of, went through this at the very beginning. I don't see any of the reports from this because it's a separate nonprofit, right? So I don't see any of the financials. So I thank you for going through those numbers up front today. So that made a difference for me. My question is if they've only used, and I'm going to round numbers, Carmen kind of did it already, 70,000 over the last decade. What's the need for the additional 45? What are the plans? What do you guys got going on that you think you need the money for?
We're more concerned about if something came in, do we have the funding to do it? Because you just never know when an easement may become available. And that includes other, such as other conservancies and land trusts that we can get an easement from.
So you just want to contain a full boat really back?
Well, we
somewhat.
just want to make sure the funding is
Cushion.
there. This motion was done 4 years ago. We've not asked for a set because,
Right.
and it may be 6 years or 2 years or 10 years before we are in this position again.
Okay.
And
So
it's also been made clear to the Conservancy that there's been an influx of out-of-staters buying property, and quite a bit up in the Northeast Kingdom, I guess, too, especially in the Northeast Kingdom, where there's some concerns with new landowners who aren't familiar with snowmobiling, may not be as agreeable as current landowners. So if we can secure that easement before we lose those trails.
I think it's good. I have no qualms with the whole setup and everything. So I'm really for it. I'm just making full disclosure. I never see how the money's spent or anything because it's a separate entity. So I don't do any double checking from my position as a treasurer of VAST, just for everybody to understand that here. That is totally separate. It's Mark Ellington. And I don't think they report back on those financials to us, but Cindy just gave us a good rundown of where the money's been spent. And I just wanted to make sure folks knew that. I don't oversee any of that. That's all.
No, Patty doesn't, but Patty will be. I did say that we would be sharing that with Patty in the future, so she'll get a copy of it. Yeah, but that's Jim Hill again, myself, Stan, Pat Poulin,
Mark.
All right, we normally have enough going on annual meeting day. I would just soon somebody made a motion in a second, we deal with it tonight, so it's one more thing off our plate.
Rutland County would make a motion.
Lemuel will second it.
Any further discussion? All those in favor say aye.
Aye.
Those against nay?
Aye.
Those against nay? Motion carries. Thank you.
One quick clarification, is it the motion for the full $2?
Yes.
Yes, sir.
Yes.
Just want to make sure it's clear.
Yep.
Thank you.
All right. Club audit and reviews, pick 4 clubs, Cindy and Patty.
Okay, so first off, it's 8 clubs because we didn't pick 4 last year. So sorry, that's my fault, typo.
Yeah.
But I've got my randomizer going.
Nice.
And I've got the spreadsheet. But Patty, I'm going to turn this over to Patty right now.
So did you want me to, do you think we have time to go quick through the presentation? Very quick, Cindy?
Yeah, go ahead, Patty. Let me make you host.
Again, while she's doing that, your host.
So I've enlisted Patty to help me. So we're currently working together to do all the follow-up and things like that with the clubs that have already been audited. So she's put together a PowerPoint presentation she's going to go through with you real quick that you guys can use. And anyway, go ahead, Patty.
Okay, so yeah, I was trying to get into slideshow mode, but it's not working. So this was really because there's new people involved. Just to give it a little bit of background. So as directors, you can notify your clubs and just bring them up to speed, and we'll get you the copy of this. So this is the table of contents. I'm not going to read it bullet by bullet, so you can go through that. What we do have in here is the bylaws, which actually put this in motion for the audits, and then the update that occurred in September 2019. So the language is there, so you don't have to go looking for it. These are the clubs that have been audited in the past. So you have that as well. And the last one, number 8, is still in process working with the CPA. So a letter went out to them within the last 30 days, just so they get moving. General findings. So I got a copy of all the audits that took place, the CPA recommendations. And what I did is I pulled from them some of the general findings. So even if your clubs in your counties aren't being audited currently, this is a great way to make sure that they've got things in line. So if they do get audited in the future, they're in good shape. So these were some of the general findings. Again, I left all the club names out. But by your bylaws, your policy, your treasury reports, it goes through just making sure your minutes, should be detailed. Your bank balances should reference the time periods. You should have check numbers, all the full disclosure to your memberships. You can read through. These are actually the CPA recommendations, a copy paste, literally just bucketed. Some of the findings where people are, the bylaws say they're one fiscal year, but they're filing in a totally different way on a calendar year instead. So you got to make sure you're in alignment there. The reimbursements to your officers should be on a standard club expense report. And deposit details should also be there. And she actually gave an example of what that looks like. So I put that in here. It's the same example she gave every club that was audited. So one thing on the top would be the deposit of $1,500. That's in the yellow. And on the bottom shows the TMAs, who they went to and the dollar figure associated, which equals the $1,500. So just to give an example of what you should, as a club, what it should be looking like. And again, this came from the CPA recommendations. General findings, again, issuing, I'm sorry?
Is this Bonnie that you got this from?
Whoever the CPA is, I'd have to pull that paper, but okay, Cindy's saying yes.
Okay, sorry.
That's okay. So, and again, I just pulled out of the general recommendations on the bottom of each one and just generically took the names out. So issuing of 1099s, if you're, paying somebody in excess of 600, gaming activities was, even in that small list of 8, there was multiple clubs that are doing those gaming activities, just to be aware of a 990T, filing of tax returns, a common thing, making sure that, if you're a 501c3, that you're filing as a 501c3. There's differences in people, how they're registered in their bylaws and how they're actually doing their filing. So those are the things the auditor's looking at. W3, W2, and then you're registered in good standing with the state of Vermont. So just as an audit timeline, just at a very high level, again, for those directors who may be new or any club officers in your county, the board tonight, whether it's May, June, or July, we usually pull the clubs that are going to be audited. Obviously, last year with the COVID, that didn't occur, but we're going to make good on that tonight. Then within 30 days of a club being pulled tonight, they'll receive, hey, you're going to be audited, the notification. And a copy of it goes to the director and the county president, and you can see the bullets there, right? And then the club will work with the CPA, and it'll have the contact information right in that notification letter, who they should contact and what they need to do. All right. Based on each of the audits, it depends on the availability between the CPA and the club, and obviously the depth of the audit, the needs of that particular club, of good, bad, ugly, whatever. It could be 6 months to a year to complete that and us receive the executive summary. So the letter that goes to the clubs after they've been audited is, again, the executive summary from the CPA. It contains those 5 portions in every letter. It's a standard letter, and each section is completed based on the findings and what was provided, and the findings and the recommendations. Okay, so everybody gets the same letter at the end of the day. So the follow-up, and this is kind of where Cindy said, we've done these audits, they've come out with recommendations. We really need to implement the follow-up to make sure that these things are kind of occurring. So each club should have, we're recommending 1 fiscal year from receipt of that executive summary with the CPA's recommendations to actually implement what they're recommending, knowing that it could be fiscal year related. There's some things that they can do right away, like on their treasury reports. There's other things that are going to require maybe bylaw changes and voting by their membership and things like that. So we're working on what the letter will be that'll come from us a year from that executive letter saying, hey, you've had a year. Those were your recommendations. We need to meet with you now to see, where you are with following up on those types of things. So that will be done by VAST leadership. We're working on that letter. We'll provide the feedback from those reviews, a year after their executive summary letter, to the board, as well as the president and the county director. And just as a reminder, this is not new news. This isn't something Patty just came up with. You know, if you don't do the review, if you don't do the audit and you don't follow through, you're putting yourself at jeopardy to receive funds from VAST. You're considered no longer in good standing with the VAST Association. So communication for you guys as directors, there's two really more important pieces. One, ensure that your clubs are aware about the VAST audit and the overall process. You know, the timeline, when you're picked, you're going to get your 30 days, you've got a year to implement, that type of thing. And VAST will be following up on a review, right? Pretty easy. You can share this PowerPoint with them, you can have it. And the second piece is going to be the follow-up a year later. Why are you laughing, Ivor? A year later. I only have 3 or 4 people on my right, and I can see you, Ivor, is to make sure that we're going to follow up with them a year later to make sure that they've implemented what was recommended. So just to make sure that those 2 key pieces that your clubs are aware of that. So what resources? So, you know, I'm not a CPA, so some of these things I'm like, oh my gosh, I know W2 obviously. So what I did is I kind of Googled them out of the findings and try to put here some of the stuff. It's easy for anybody to do the Googling, you know, to figure out what these things are, but I just put a couple of the key pieces out of the findings. Just keep in mind, VAST does have a budget line on it for those clubs that are in really need of CPA support. So you have to come to Cindy and she will set them up with a CPA. Nobody's leaving anybody out on their own. If there's somebody that's really in need of that, contact Cindy Locke for that type of support, okay? And then when to file, again, the fiscal year versus the bylaws, there's all that, the 1099, the 990T, all the stuff that was in the recommendations, the 501 versus a 501c3, W3, W2, W9. So all that I put in there. Then I just wanted to take a moment because we just want to make sure that everybody is registered in good standing with the Secretary of State. So there's the link to it. It's very easy to find. I'm going to apologize up front. I do use a club in the next screenshot, but you can actually go in there. There are 4 items here for you. I pulled this right from the state site. You just put the name in. I use the Lunenburg guys there, and you can see that they're in good standing. And it also has their officers that are listed there as well. You also can contact them directly if you're struggling through that, but it's a good way within your county to even see, do you have any clubs that maybe are not in good standing that need to follow up? And then this is our selection process. I did that really quick, didn't I? All right.
Go ahead, Carmen. Carmen, you got a question?
Patty, can you email us that slide presentation like sooner rather than later?
Yes. So I have it in color here because it looked really pretty, but I also did a version of it when I'll give them both to Cindy Jones to send out without any color. So if you wanted to print it, obviously it's a lot less ink. So I'll give you both versions of it. It's the same text, just one has a color background, which will probably suck the wind out of your printers. The other one's just black and white. So I'll send both of those to her to have them distribute them.
Thank you very much, Patty. Well done.
Thanks, Patty. Can you make me host again, Patty?
Yes, I gotta unshare now.
Patty, if I can get that before next Monday, I'd be super excited.
All right, 1 second here. Let me just get my thing here. I just click on your name to do it.
No, I'm already host. I don't know what you did.
Great. Excellent. So, and if anybody wants me to go to any of their counties, I'm also willing to help with that. Doug, obviously by default, I'm the secretary of your county, so you make out all right. But anybody needs help with any of this, I'd be more than happy to help out.
Patty, I'm wrong. I'm not host. You need to scroll over me, and then there a little blue box with 3 dots pops up. Click on that, and then scroll down and make host. Okay. There you are. I'm now host.
Excellent. Okay. Thank you.
Thank you.
Cindy, Mike Arbor question.
Yeah.
Are you about to pick 8 clubs out of a hat?
Kind of. I'm random. Yeah. Yeah.
Okay. So I think that since this year you're picking 8, you should limit each county to a maximum of 2 clubs being audited.
Well, that's not fair because there's different amounts of clubs in each county. It shouldn't go by county line. The fairest way to do it is just pull them all out of the same hat.
Correct.
You could in reality, you could kill a county if you give them 5 audits and, you know, something goes wrong. I don't know if anything's ever gone wrong in the past.
It's a random selector. It's that way it keeps it impartial so nobody's focused on.
Yeah, there've been, I mean, yeah.
That's a good point.
It is a good point, but it's an electronic, not controlled by VAS selection process. It's
Right.
ambiguous. It's out there. It's
The way it works is each club has been given a number, and then you 1 through 127, and then Cindy uses a random number generator, and the first number will be out like poof, 43, and we look and say, oh, 43 is the Berrytown Thunder Chickens.
Yeah, I understand how that goes. Can the same club be audited 2 years in a row, 3 years in a row?
No.
No, in fact, I have a spreadsheet with everybody's numbers, and I've already written like what year, like that if they've already been picked. So if their number comes up, we'll do it again and pick a different.
And I
club.
forget what we set how many years they're out of the pool once they've been audited, and I forget what the number was.
I think it's 5.
Yeah, 5. That's right.
Any other questions for Cindy or Patty on this? All right.
Okay, I'm going to share my screen. Okay, so we can see who we've got here, all the numbers. We've got 1 through 123, and I've asked it to not repeat. No, I don't want to. Hang on. Sorry, some ads just popped up. I don't want.
So Cindy, if
right.
your random thing comes up for a club that's been dissolved, does that automatically defer to whoever absorbed it?
Huh? I didn't understand the question.
If your random selector chooses a club that's been dissolved in the past, does it automatically defer to whatever club absolved or took on?
No, I think we would just pick another club if it's dissolved.
Okay.
Don't you agree? All right, so this is first one is the Green Mountain Trailblazers. Oh boy. We can't even get grooming log sheets at the end of the year grooming payments to them. Yippee. Okay, next one. 74.
Which county is that? Green Mountain Trailblazers.
Bennington. North Country Mountaineers. Oh, they're going to be happy too. Ooh. That's this is Orleans County. What's it say? 28. Didn't we just do 28? Or was I close to 28? Oh, 48. 28. Country Riders, Orleans County.
Corneth. 28.
Oh, no, it's country 28 is Country Riders.
Oh, okay.
Corinth is 27.
That's Orleans County Country Riders?
Yep.
Yeah.
80.
I was looking at the wrong column.
Paulette Bushwhackers.
Absolved.
Okay. $44. Grafton, Ivor.
Bingo.
You're dissolving, aren't you, Ivor? Just so you can avoid this.
All right, how many do we have so far? We have 1, 2, 3.
We got 4. We're halfway there.
Thank you, Carmen. Okay. 114. West Windsor Moonlighters. That's Dennis, Windsor County. $20. Canaan Border Riders, Essex County. $45. Green Mountain Climbers.
Where are they?
Danby Club.
Danby.
Last one, 109.
Which county is Green Mountain Climbers?
Rutland.
Whew. Wardsboro Pathfinders.
And that's Wyndham, right?
Yeah, it is. Yeah. So you got 2 from Wyndham County.
2 from Wyndham, 2 from Orleans.
1, 2, 3,
8. You got them.
6, 7, 8. Yeah, just checking, just double checking. Okay, everybody good with?
It's no more than 2 per county, so.
Yeah, and we will, these names will be included in the minutes. And so I'll make sure that Cindy's got that.
I got them.
Cindy,
I'm saving it.
I can help you update your list too. Arrowhead Mountain is absolved up towards the top.
Okay, it's
I would
saved.
say dissolved, not absolved.
Well,
dissolved.
Gone.
Oh, isn't that what a priest does? Absolves you of all your sins?
Which one?
Number.
Arrowhead.
Yep.
Well, I'm just gonna make it red for now because I'll go back and clean this up later.
Cabot Skylighters, number 18 as well.
Green Mountain Snowcats. Number, yep.
47. 47. Anything else?
Oh, it's line item versus number, the 2 different numbers.
Oh, Jesus. Yep.
I made the mistake earlier.
Anything else jumping out at anybody?
Great minds.
Okay.
You've got Westminster Powder Pounders, 115.
Yep.
No, I'm just waiting for it to save. It's saving to the server, so it takes a minute.
Gotcha.
It's got to go to outer space and back.
And is Abenaki on there at the top?
Yes, it was.
Okay.
Yeah, we took them. We did it already.
Perfect. Thanks.
Okay.
I don't think we did Abnaki.
No,
No, you
we
didn't.
did Arrowhead.
No, we did
We did
Arrowhead.
Kind of the same thing, but different. Abnakis may have used arrowheads.
Okay, I'm done. Thank you, everybody.
Thank you.
That put us under 120 clubs now?
Well, some of them have
Yes.
merged to other ones. Yeah, yeah.
All right. Number 10, Trails Administrator, ED report, now VRT report. Anybody have any questions on the reports they have in their packet? Anything else covered?
I can just add that I don't know Ken put it in his report or not, but we've met with Michelle Boomhauer at AOT, and the state of Vermont is looking to completely take over the trail as of next July, including routine maintenance, with the exception of just our grooming and putting up our own signs.
That's good news.
So do they plan on doing any construction this
So
year?
with that, Cindy.
Oh yeah, yep. They've already started on some small, and they're still permitting, but yeah, they're working, and we'll also be starting to work with towns. We're going to help them to get volunteers, and Ken's been pointing them in the right direction to meet with towns to mapping and signage and stuff like that.
Well, look, just for an FYI, I ride both ends of the LVRT and stuff on the cycle, and it's been very busy this year. I mean, if it dropped off after COVID, it didn't.
No.
I was in St. Jay this last Saturday, and it was packed.
It's awesome.
Nice. All right. Moving on to committee.
I think Kurt had a question.
Yeah, I was just going to let you know, I've tried reaching out to East multiple times regarding their signage issues and what have you, via email and text, phone calls, and no response. So I'll keep trying, and we'll see what we come up with.
Thank you, Kurt.
You're welcome.
All All right, committee and other meeting reports. Northeast chapter, Pat and Jeff.
The USA did have a meeting this week, but I was late to it, so I don't have a lot to report. I was 10 minutes late and they were half done, so it wasn't much.
All right. Snow Trails Conservancy, Jim.
Unmute.
Nothing right now.
I've heard that you've had some funds transferred recently. Law Enforcement Committee, Gary?
Nope.
Perfect, thanks, Cindy. LVRT, Ken? Nothing. Awards and nominating, Patty?
Yep, we're still working through the administration process, the notifications, the speeches and stuff like that. And the committee write-up was submitted for the annual report.
Perfect, thank you. Bylaws and Policy, Jeff?
Covered earlier.
Covered earlier. Annual meeting, Pat and Jeff?
Yes, there will be one.
Nice.
Same bat time, same bat channel.
Yeah, pretty much.
Perfect.
I think we're in pretty good shape. Tents covered, food's covered. We're going to use the ambassadors for parking again. We're going to get together here shortly and get vendor information out to people. I've had a couple of requests come my direction. So we are planning for vendors.
So if you don't mind me asking, what are the food arrangements, Jeff?
Yes.
Yes.
There is food.
Good.
Mr. Sausage.
It's a food truck.
What? Mr. Sausage?
Yes.
I'm in.
Burgers, dogs, kielbasa, brats, whatever.
Mr. Sausage is the best food vendor at the Champlain Valley Fair.
Well,
No, that's Sausage King. Never mind.
It's all Billy Bissonette at the fair.
Do you get a coupon if you're an officer?
We will be selling tickets for lunch versus a pre-registration. So price to be determined, probably somewhere between 10 and 12 bucks, probably 10, just to keep the numbers real simple.
Nice.
Perfect.
Heartburns extra.
No, it's free.
Yeah, it's free.
You guys, Lewis is going to kill you.
Why?
Carmen, question.
So, Jeff, when will you be, or Cindy, when will you be getting out, like the delegate, like count information, for the clubs and things like that? Because I know sometimes the clubs say they'll pay for lunch for whoever's going.
We
Say 60 days.
Yeah, we usually do that really, right off pretty soon. The annual report's gone to the printers, so that's going to be out as well. And the delegate counts. Usually it's after the audit. The audit was a little later this year, so it should be, in a week or so, we'll be able to get that out to everybody.
Okay, great.
All right, nice. Financial, Patty, you have anything you want to add?
Nope, just we've covered everything pretty much tonight, other than the committee report was also submitted for the annual report. So, and the PowerPoint will get out to everybody.
Perfect, thanks, Patty. Long-range planning and organization, anything you want to add, Mark?
No, I spoke enough tonight.
Thank you. For all of your speaking, it was well done. You did a great job, Mark.
Thank you.
Resource committee.
Good job.
Ellis and Perry have all the meeting recordings. They're still reviewing them, and we haven't had time to get together yet.
Personnel, Jeff.
The ED review has been done. I was having computer issues earlier. I need to have someone that was on the meeting 2 weeks ago make the motion that we had discussed as far as the salary adjustment for the executive director.
Do you need that tonight, Jeff?
Yes.
Well, I was on that meeting, so what, I will make that motion, Lamoille
Okay.
for you. You need a second, though. I don't.
Rutland County. was-
Julianne has her hand up.
Looks like Julianne is doing the second. Either that or peace, one or the other.
Shouldn't we actually hear what the motion is that she's making?
The
$10 million.
the
all back to the trail system.
The recommendation that was discussed was a 1.5% cost of living increase to the executive director's salary.
Okay.
And being a personnel matter, I will not disclose what that number is.
Sorry, that's why I didn't specify. I didn't know if that was allowed to be said or not. Sorry.
Yep.
That my bad.
No, the 1.5% is enough.
He means it's enough of a description.
Yes.
That wasn't a judgment call.
It's never enough.
Just clarifying.
We were also told she could decline, so.
So it's a matter handled by the personnel committee, right?
Yes, and Cindy and I got together and discussed her overall review. It was more better than there was bad, so there were a couple of items that were brought up that need a little work, but nothing more than, any good executive director would work on.
I also would like to add that there are a couple of things that needed clarification.
I only heard about half of that.
I said I'd also like to add that we also discussed that there were some items that needed clarification.
Yes. And
You're addressing that, right, then?
I'm not quite sure how we can do that in a secure format, I guess. But we can work on that, Cindy.
I mean, I'm fine with just talking to anybody that ever had a problem. So I don't understand why, if someone, if there's a communication or something, because, very often I can figure out what it is because I communicate with everybody so much that, so anyway, I'm an open book, open door, open book. Always willing to work on things, but also, want to make sure that things are fair and that I have a voice in that as well.
Yes.
Quick question, is this a motion that was just made?
Yes.
Yes.
We're still working on that motion. Technically, that should have probably been up under new business.
I know. I explained that I was having computer issues and I could not do it when you were asking for agenda additions.
Oh, sorry, Jeff. Sorry, I didn't realize that.
Well, I couldn't tell you when you were doing it and you were already into the presentation when I got back on, so.
So the motion is
there.
The motion has been made and seconded by Boyle and Orange. Am I correct?
Yes.
Yes.
So it's ready for a vote. I take it
Yes.
for further discussion.
Unless there's further discussion. Is there any further discussion? All right, hearing none, we'll take it to a vote. All those in favor of the recommended rate increase for the executive director, say aye.
Aye.
Those against, nay. Motion carries. I will say that Cindy is in a very uniquely hard position. And when people fill out their forms for how they feel or what their take on how the position is, they don't always see the whole picture, but also they need to be able to stand behind the recommendations and the remarks that they make. It's no different than having your day in court. You need to face your accuser. So I do sympathize with Cindy, but I would with anybody else that was also in the same position. I'm not her side. It's a side that's across the board. As a supervisor in my own work professionally.
Well, Tim, I can tell you that the conversation it was a good conversation that night, and everybody I think was heard, and I think that Jeff moderated it, very well, and we are all aware that when we as directors fill those out, that those are based on personal. So sometimes, it is a personal, thing that may come up in the review. We're all aware of that.
Yeah.
So,
Personal opinions and reactions don't always have a place in reviews. And that's very hard to put in its place.
yes.
All right, let's move forward before it gets ugly.
Thank you, everyone.
Trails, Jeff.
Nothing. Ivor.
At our last Trails Committee meeting, we had a pile of subsidies that got paid out, and we had talked about Jacksonville Easy Riders had a fairly reflective looking contract, and that was our basis for not doing a subsidy for them. Their contract reflected what their on the ground grooming is, but we did find quite a few other clubs that were getting subsidies that did not have contracts that were an accurate reflection of their on the ground grooming. And we had talked about those contracts being adjusted before this next season. I just wanted to make sure Ken, I know Matt's got his hands full, but if Ken could work on that, or if Matt could, I just want to make sure somebody's working on adjusting those other grooming contracts before we roll into another season.
Okay.
Anybody have any questions on that?
I think the hope is that we'll have something from the resource committee that we might be able to roll into a new contract, is what the hope is.
Yep.
Yeah.
But at this point in time, I don't have anything planned for a meeting. We will probably do something after September is my guess. So probably October.
All right. Safety, Dan.
We didn't have a month. We've taken July and August off. I did send in the report for the annual meeting.
All right. Thank you. Governor's Council, Pat.
I too sent in a report for the annual meeting, but we are not meeting either until first Wednesday of September.
Perfect. All right. Is there anything else that needs to come before this board for the meeting tonight?
I just have a quick question. I think that this is for Cindy since she sent the email. New contracts for law enforcement. When are those usually out, Cindy? I know it says fall, but
We usually do the contracts in September or October, really October.
Okay.
But I have new agencies, so I'll be getting those out in August. So for the Morristown PD, it'll be August, and for the folks in Newport, it'll be in August.
okay. Thank you.
Welcome.
Anything else anybody would like to bring before the board before we adjourn this meeting?
I would like to say thank you, Cindy, for all you do. Keep up the good work there.
Thank you. Thanks for all you guys do.
Thank you.
Appreciate it.
Watch out for the bears behind you.
Actually, a group of ducks just came through a little while ago. I was like, you saw me? I put myself on mute and I whispered to my mother, do not feed them.
Cheers, everybody. Got to roll. Be safe.
Good night.
All
I need a
right.
motion. Julianne has her hand up, but she's on mute.
I'm just saying goodnight.
Oh, okay.
No, I need a motion in a second.
Washington County move to adjourn.
Any further discussion? All those in favor, say aye.
Aye. Bye.
Thank
Who was
you.
the second? Who was the second? I got Washington.
Lewis was.
So Lewis, okay.
Thanks, everybody. Have a good
Thank
night.
you. Have a
Bye.
great evening.